The other one, yeah, was this quote here: "I'm crawling out of the woodwork." Well, no shit. So I'm a trader and I trade human emotions. That is effectively what all currency or traders are. We don't trade the markets. We trade humans. That is all. And human emotion is simply illustrated in the form of candlesticks. That's it. That is trading in a nutshell. When you fully understand that it's humans that move markets, and therefore candlesticks are human movement and human emotion and human thinking. So as a trader, and hopefully going through the course, whether you're in a trading test drive or a full member, you'll see that you will really learn how to trade human emotions, and that's how, when we're seeing breakouts, etc. The reason people like double tops form is because people are sort of selling out at break even and all that sort of stuff. Right, so first of all, I'm seeing this a lot, okay, and this will make sense in a minute. I've got a couple of trolls, everyone has trolls, and they're saying, "Oh, Siam's crawling out the woodwork again, now crypto's rallying, and yeah, he disappeared during the bear market, and now it's bullet," I'm like, oh, God's sake. And these people just don't get it. And I think it's because they're completely oblivious to the biggest crypto cardinal rules or sins, etc. And people have a very selective memory. And so this is a very important learning lesson for everyone here today, okay? So if I was going to summarize the most important rules and lessons of crypto, it's lesson 1. To begin with, if you're first getting into crypto, risk capital, okay? Now, not just risk capital, it's your liquid risk capital. So let's add that. In fact, let's start again. Because we all may, so risk capital and liquid risk capital are two different things. You may have some risk capital, which is probably tied up in some stuff, which may take time to sort of, exit and sell, etc. So that's not really that liquid. But then you have liquid risk capital. So that's literally just cash sitting around in a bank account or an ISA doing F all, risk capital. So if we move this over here. So first of all, in crypto, when we're doing the original Kryptonian portfolio, this rule was absolutely essential because it was early 2017, things were starting to boom, and cryptos in general was a pretty dodgy market. I mean, it still is a dodgy market, but back then it was an even more dodgy market. So this is the number one rule: you shouldn't invest more than you can afford to lose. And also, so that's one sort of sub caveat, so that lose thing. And then also, you shouldn't put more than you're emotionally capable of, okay? Now, everyone has an emotional tolerance. Everyone does. I don't care who you are. You could be Elon Musk, and he will have an emotional capital, like a capital emotional tolerance level. So, for example, if all of a sudden, a whole bunch of countries loaned him $10 trillion, I'm pretty sure that would be, flagging up his emotional tolerance in terms of capital. Just like if you took a random person off the street and then gave them a £10 million loan or a £1 million loan or a pot to play with, all of a sudden that would be squeaking their emotional tolerances. And so what happened with a lot of people in the crypto market is that they were putting money which they could not afford to lose and money which was way over their emotional tolerances. So they would see a crypto that they invest in go up 10%, and they're like, holy shit, this is like crazy returns, even though it's only gone up 10%. And then on the vice versa, it goes down 10%. They're like, oh no. So that's like the most important thing, don't put more than you can afford to lose. I mean, I shouldn't have to say this because we're all adults here, but evidently and empirically, the world is full of childish adults. So the other one, was this quote here: "I'm crawling out of the woodwork." Well, no shit. So I'm a trader and I trade human emotions. That is effectively what all currency or traders are. We don't trade the markets. We trade humans. That is all. And human emotion is simply illustrated in the form of candlesticks. That's it. That is trading in a nutshell. When you fully understand that it's humans that move markets, and therefore candlesticks are human movement and human emotion and human thinking. So as a trader, and hopefully going through the course, whether you're in a trading test drive or a full member, you'll see that like you will really learn how to trade human emotions, and that's how, you know, when we're seeing breakouts, etc. The reason, you know, people like double tops form is because people are sort of selling out at break even and all that sort of stuff. You'll get that. Now, so in 2017, I was riding the hype, obviously, trying to make as much money as I could, which is great. And then obviously the market crashed like massively, and then I got out at some point. So I think my public account, where I was trading like sharing every live trade, I think this was the story. It basically went from $25,000 up to $1.1 million. Then I got out a bit late and then exited at about 350 or 300 to 350k, something like that. I can't remember. It was circa when Bitcoin was between 11 to 13,000 Bitcoin. So dollars, sorry. And that's when I went on Twitter saying, look, get out. This is game over, folks. And so I got most of my money out of crypto then, and then I had a small holding of Ether, and that is when I was doing the jumping out, in and out, and in and out to try and grow the Ether holdings. And then obviously most of 2018, 2019, crypto was doing nothing, and so of course I'm not going to be in crypto, because as an investor you have to be aware of two key things here: return on capital invested and also return on time invested. So if I was just going to plonk my money in crypto and then just wait and hope for you know, someone to come and prod it with a stick, then like there's no control. So remember, I'm not just a trader, and hopefully you or everyone here listening won't just be a trader. We're in the wealth generation game. Trading is just one arrow in your quiver. So all I did was just take out any money I had, and then reallocated it into other stuff. So for me, back into businesses, other assets, etc., etc. And that way, I'm working my money. I'm not just waiting until crypto then picks up. Now, obviously, crypto did have a few false starts, which is good, and I missed all of them because I said, look, this, you know, we're always going to have some false starts and false hopes, etc. And then eventually it does its thing. So of course, I'm going to be attracted back into this market once it gets past sort of, you know, the resistance of false hopes, so to speak, and that's what we did. This is why I think summer last year we got back into it, and I opened up I shared another live account. I put £20,000 into Ether back in whenever I set up my SIP. And so now, guess what? I'm trading the hype cycle again. But it's not just the hype cycle. There's so much more than just hype these days. A lot of that hype has now got real fundamentals behind it. Fundamentals, okay? So I guess this takes us to the next thing. So yes, I guess I have crawled out of the woodwork, but simply because there's now less risk, okay? And it's all about your return on time invested. So for example, yes, anyone can say, oh, I've made 1,000% because I've been hodling for the last 2 years or 4 years or whatever. But then when you look at when we entered the Kryptonian portfolio, and you go through any of these charts, what is the return based on the time of these trades? So basically, we're now the 15th of Feb. So this whole portfolio has been running for a month, basically. And as we click down this list, you'll see that all these areas we got in on the pullback, and that's the key. You get in on a pullback, you exit on a surge. I cannot stress this enough. Every man any man and woman on the street with markets in general, as markets are surging, they will do nothing. Then as it starts to run away, they'll sell. And so this is what everyone does, and so you shouldn't do that. You need to, and it's hard, but you need to get into the habit of selling in surges, and then as it pulls back, you then buy, not sell. Okay, and so this is what I was waiting for in this Jan crash. So when we got in January, we had a bit of a pullback here, and that's when. Yeah, Matthew, spot on. Which Matthew are you? Is it Matthew Hall, Baker, Smith? Nice one. Matty, nice. Yeah, as he said, enter on small bars, exit on big bars. Word. So obviously, I didn't time this perfectly with Bitcoin because that was 11th of Jan, yeah. So I put the but we got in on a nice pullback here, and then it rallied. However, everything else rallied rather nicely, and as we go down all of these alts, we got in on very nice lows, and a lot of them. I've barely got into this one. Let's go to dot, like down here. So this is what we're doing. We're getting in on these lows. So, but the thing, something else which is very interesting is riskiness versus volatility. Okay, so everyone that I meet in general think they think